And it's the midweek trading day right here in Lagos, Nigeria. Here's what's coming up on the show. Well, is it big relief for investors? After a long pause, reports suggest MTN Nigeria, Nigerian Breweries, and Guinness Nigeria could all resume dividend payouts this year. And South Africa's consumer prices rise 3.5% year-on-year in July. Is this the start of renewed inflationary pressure or just a blip? And big moves in Nairobi. The government is weighing a plan to break up Safaricom, separating its mobile tower and M-Pesa businesses. It's great to have you join us. I'm Ladi Williams. Let's kick off now with what's playing out with the markets. Now, let's get a check on oil. We see oil prices rose today as the American Petroleum Institute reported a drop in U.S. crude inventories, and investors, they're awaiting next steps in talks to end the war in Ukraine, with sanctions on Russian crude remaining in place for now. But we're seeing positive sentiment there. 0.65% this afternoon, $66.22 a barrel. That's for Brent crude, WTI, that's up 0.75%. Still trying to hold on to that $60 level. We see they fell more than 1% yesterday on optimism that an agreement could end the war. And that seemed closer at this time. But however, U.S. President Donald Trump, he conceded that Russian President Vladimir Putin might not want to make a deal at this time, and we're seeing investors already reacting right there. Let's get a check on metals now. We see the metals market, gold futures and spot gold, silver. This one's not looking so bad at this point. We see it's just silver that's the lone loser right now, $37.26 per ounce. But we see spot gold, that's up 0.30%, same as U.S. gold futures. Platinum, $1,322 per ounce. That's up 0.72%. That's the biggest move there we have in metals. Palladium up 0.31%, still holding on to $1,000. The yellow metal saw limited demand, even as sentiment in broader financial markets turned largely risk off, with Wall Street and global stocks logging steep losses this week. But traders, they favored the dollar over gold, especially amid growing uncertainty over whether the Federal Reserve will cut interest rates in September. So we see gold there, still seen as a safe haven right now. All right, to other stories, right there we see in Kenya. Kenya is weighing a major shake-up for its largest listed company, that's Safaricom PLC, with plans to split the telecoms giant into 3 separate units covering its core mobile operations, tower infrastructure, and the fast-growing M-Pesa payments platform. Treasury Secretary John Mbadi said in Nairobi on Wednesday that a government assessment showed huge benefits could arise from the restructuring, which would create standalone businesses to drive efficiency and unlock greater value for shareholders and the economy in Kenya. Meanwhile, we see Kenya is projecting a stronger than expected economic performance in 2025, with growth forecasts at 5.6%, up from 4.7% last year, above prior estimates from both the Finance Ministry, which is about 5.3%, and the Central Bank of Kenya, which was 5.2%. President William Ruto announced at the TICAD conference, that was earlier today, in a bid to diversify funding amid global uncertainties. Kenya also signed a yen-denominated loan agreement with Japan, backed by Nippon Export and Investment Insurance, NEXI. While specific terms were not disclosed, the move is expected to reduce borrowing costs and support infrastructure and development financing. And India's Tata Motors is reviving back into South Africa's passenger car market after a 6-year break, launching a fresh lineup of combustion engine vehicles, including the Punch, the Curve, Tiago, and Harrier, set to arrive in showrooms from September. The company aims for a 6% to 8% market share and a top 5 ranking, leveraging a partnership with Motors Holdings to expand from 40 dealerships today to about 60 by 2026. Tata emphasized that this renewed effort is informed by lessons learned from its earlier exit, gearing up to challenge the recent wave of cheaper Chinese brand imports. And foreign exchange inflows to Nigeria surged 24% in July 2025, reaching an estimated $3.8 billion, up from $3.1 billion in June, signaling renewed investor confidence in the economy. Notably, non-bank corporates have overtaken foreign portfolio investors, as FPIs, as dominant contributors for 2 straight weeks, underscoring a shift in the composition of FX supply. And South Africa's headline consumer inflation rose to 3.5% in July, up from 3% in June, marking the highest rate since September 2024, when it stood at about 3.8%. On average, prices increased by 0.9% between June and July. Food and non-alcoholic beverage inflation also continued to climb, accelerating to 5.7% in July from 5.1% in June. The biggest drivers were meat, vegetables, with beef in particular, pushing the trend. Patrick Kelly is the Chief Director for Price Statistics, and he brings this report. Take a listen.
And for hot beverages cooled for a third straight month to 8.9% in July. This is down from a peak of 17.5% recorded in August last year. Some good news on the coffee front. Instant coffee prices declined slightly between June and July, pulling the annual rate down to its lowest level since January 2024. Prices for cappuccino sachets decreased for a second consecutive month. The dairy and eggs category remained in deflationary territory. Several products are cheaper than a year ago, including maize-based food drinks, eggs, and certain milk varieties. Prices for cheese, however, continue to rise. Gouda is 7.2% and cheddar 5.5% more expensive than a year ago. Each July, the CPI casts its spotlight on municipal tariffs, which are adjusted annually when municipalities introduce their new budgets.
And that was Patrick Kelly there, Chief Director for Price Statistics right there in South Africa. All right, let's get a check on what's playing out with the markets that we track here on the African continent. We see it's mostly negative sentiment there with the NGX continuing. We're seeing, I don't know if it's a correction at this point. That's for the all-share index on the NGX, Nigeria's stock market, 0.33%. That's the intraday trade there in South Africa. We're also seeing a pullback there for the Johannesburg Stock Exchange Index, 100,948, 0.24% down at this time. And yeah, I did say earlier that we have reports that MTN Nigeria, the reports that they might actually be paying dividends this year. Let's look at the last time these companies actually paid dividends. That's starting with MTN Nigeria. The last time they paid, that was August 2023. That was the last time they paid dividends to investors. Nigeria Breweries, April 2023. And we see Guinness Nigeria, October 2022. Those are the last times these companies paid investors, some goodies there. All right, let's talk to Kehinde Jones now as a research analyst at Ancoria Asset Management. Great to have you on the show. Good afternoon.
Good afternoon, Daddy. Thanks for having me.
Yeah, so I guess this is good news for investors in these stocks. But what financial improvements have allowed these companies to think of restarting dividends, and how sustainable are these changes?
In terms of profitability, financial improvement of this company, like MTN and Guinness, what really have improved this company is the profitability. In terms of stronger cash flow, in terms of debt restructure. Just for like MTN in 2024, total shareholder fund was around 452 billion. However, within 6 months, this shareholders fund that was negative reduced from 452 to 42 billion. So these are really improved the company profitability. And you will see cost management effectiveness have enhanced and enabled this company to consider dividend payout. However, the sustainability will depend on consistent revenue growth and also stability in foreign exchange and discipline expense control. So my belief is sustainability is there for all this company, Nestle, MTN, and Guinness. And I believe that by the end of 2025, as little it may be, this company will want to pay little or high dividends. So my thought and my belief is that profitability have increased, strong cash flow, debt restructure, improve cost management, and consistent revenue growth for these companies.
All right. So, how might this wave of dividend resumptions, drawing in previously hit firms like Cadbury, Unilever, and Nascon, how would that affect investor sentiment and the broader, Nigerian equity market?
If you look at NGS, all those stocks listed on NGS, in terms of from January to year to date, you will see that dividend resumption by let me say blue chip stock or previously company that is in distress like MTN, Nestle, and the rest, even Presco or Common, now are not paying good dividends. So this is likely to boost investor confidence and attract more income-focused investors. We will see an FPI increase in the month of July by 24%, and this also have improved the market liquidity. If you look down to further support from the bullish momentum, the sentiment in Nigeria equity market, you will consider consumer goods and telecommunication sector to have this investor sentiment and market sentiment. So there's market uncertainty, but the uncertainty have reduced to what we are coming for in 2024. So my belief is that dividend resumption will be on value stock that have recovered, that have rebounded in 2024 to 2025, that have grown their financial books, and investor sentiment will be more on consumer sector, industrial sector, and telecommunication sector. So furthermore of the bullish sentiment. However, this week we'll be seeing bearish sentiment in the market based on profit taking, based on sector.
And talking about
so
profit taking,
telecommunication will move on.
Right, talking about profit taking in the market that we're seeing so far, is this the start of a correction or is it just a pullback?
It's just a drawback. Last week this profit taking, or let me say the drawback, started with the insurance sector, where there was a panic selling, a lot of panic selling in the market. Last week, Thursday, Friday, where we saw most investors are selling off insurance sector. Upper week, when the fund insurance sector act came out, the insurance index gained above 40%. So just for last week, Wednesday to Thursday to Friday, during the market, most investors are not selling off their insurance stock, probably because of profit taking and panic selling. So I'm seeing that there's not much market correction. The market correction will occur when the banking sectors release their financials. And now, if you look at what's going on, Zenith Bank, UBA, Access send out a public disclosure saying that their financials will be delayed to ending August to September. So this is probably will take us to market correction. So I'm looking at the NGS going back to 95 trillion as end of 2025.
All right, we'll definitely keep watching out for that. Thank you so much. That was Kehinde Jones, a research analyst and Korea Asset Management. Thank you for coming on today. All right, let's get a check on what's playing out in North Africa now. We see the EGX 30 index slipped into negative territory today with the benchmark falling there about 1.08%, 35,707 points. The Nairobi Stock Exchange closed yesterday down 0.10% there. Let's get a check on the Middle Eastern markets now, see how they're looking. And the UAE, it's negative sentiment there for the Gulf region, 6,123 points. That's for the Dubai index, down 0.44%. We see Abu Dhabi index is down 0.13%. Other markets we track in the Middle East, that's looking at the Saudi Arabia. That's a lone gainer there for the Saudi Arabia index, 0.25%. Up. We'll see a bigger drop there for the Qatari index. That's down 1.61%. Investors still watching out for what's going to play out. That's for Jackson Hole. What does the Fed chair, Jerome Powell, is going to say about interest rates going forward? Are we going to get that cut, or how many cuts at this point? Let's get a check on the U.S. markets now. We see the S&P 500 futures. That slipped, 0.16%, 44,929 points. S&P futures down also 0.16%, but at the time we took the data. And the tech-heavy NASDAQ, that's down 0.24% at 23,413 points. Not been able to climb back to that 24,000 level. But let's get a summary of yesterday's close from our correspondent, Maria Bird.
The U.S. stock market had a few challenges on Tuesday, as the Dow Jones was just above flatline at 0.02% up, and the heavy tech NASDAQ was the lowest of the day at 1.5% down, as the S&P 500 also saw a bit of a dip on Tuesday at 0.6% down. Many investors were watching to see what will happen over the next few days and weeks ahead, as big tech put a major dent into the U.S. stock market on Tuesday. It is much hope that we could see some rising in the tech industry over the next few weeks. And it's hope that we could see a stronger stock market toward the end of the week.
Maria, let's get a check on Asia now. We see Asia Pacific markets close mostly lower today. Tracking Wall Street declines overnight as investors they paused Japan's trade data and China's loan prime rate decision. That we see the Nikkei down a big 1.51%. Hang Seng Index there up 0.17% to close. Let's look at the other markets we tracked there for the Nifty 50 in India. Let's see what's happening in India. That's for the Nifty 50. Okay, yeah, it's green, 0.28%. The Shanghai Composite 1.04% up, so it's good for those markets that we tracked there. But let's flip over to Europe now. Looking at the markets in Europe, we have Lars Holter joining us. Great to have you, Lars. What are investors looking at in today's trading in Europe?
Yeah, hello, Lottie. Good to be with you again. Well, markets here, a little bit mixed. We have London, the FTSE 100, and France and Paris, the CAC 40, up a little bit. We have the DAX a little bit lower once again in Frankfurt. Generally, Lottie, we're continuing to see what we've been seeing for the past few weeks. It's more or less a sideways trading course, and we haven't really seen a catalyst for big moves in either direction. Now, investors, you just mentioned the Fed watchers over on Wall Street. And even if we're talking to people in Frankfurt, yes, of course, people are looking towards the Fed for some direction. But to be honest, it is really hard to tie whatever they're seeing to what's really happening in trading. Maybe, Lottie, it's worth taking a quick look at some defense stocks. They're down for the second day in a row. Rheinmetall in the DAX, biggest loser, down 3.5%. And then the two companies, Renk and Hensoldt, down over 3% too. Not very well known, of course, but those are companies manufacturing tank parts. So all the big defense shares down over 3%. Obviously, as there is some hope on Russia's war in Ukraine maybe ending at some point. But seriously, why are these stocks falling? Because it seems pretty clear that with European countries investing more generally in their military and defense, those companies will be doing pretty well for a long time to come.
Right. Meanwhile, we're getting some numbers from the auto sector there. It seems Chinese companies are selling more cars in the EU. What can you tell us about this latest numbers?
That's right, Lottie, and I can definitely tell you that things are getting dicey for European car makers. We've seen a certain trend for a while, of course, with Chinese cars getting better, with a move into electric mobility and with German and European firms losing China as their once biggest market. Indeed, Chinese car makers have turned the tables and are now selling more vehicles in the EU. Here's a few numbers. BYD, their biggest brand over there, has registered 20,000 plug-in hybrids in the EU in the past half year, and that's a plus of 17,000% over the previous year when it was just a couple of hundred cars here. Lynx and SAIC, two other brands here, also seeing similar growth, and that is a lot. Despite tariffs, the EU charges 10% plus an additional 17% as a punitive tariff to counter subsidies from Beijing. But what do these companies do out of China? They have adapted their strategy, and instead of selling battery-only cars, they're selling plug-in hybrids, which are not subject to tariffs. Here's some numbers on that. While some fully battery-driven models like BYD's Atto 3, they pay around 10,000 euros in tariffs, but the plug-in CLU only costs them 4,000 euros in tariffs. The EU knows this is going on, but they're currently unsure how to proceed. Changing the tariff structure is a long process, and Brussels, of course, is not exactly known for moving fast.
Yeah, that's quite interesting. But, very quickly now, before I let you go, what does the future hold now, for Chinese and German car makers?
Well, for Germans, really, Lottie, it's going to likely be more problems if the EU can't plug this hole. The Chinese firms will likely take up more market share, and their strategy really seems to be selling hybrids, as many as possible, at very low prices, never mind margins here, and just get cars on the street, get brand recognition all across the EU. And then once you have that, at a later point, lure these customers over into the regular, fully battery-driven models that are getting better every year. And even if they're going to be a bit more expensive because of tariffs, they're probably still going to sell well here compared to the generally much more expensive German or European-made cars. Now, to achieve this, the Chinese car makers are adapting their model offerings too. In a few weeks, BYD is set to introduce a car called the CL6, which is a station wagon of exactly the type Europeans like. It's actually already on the market in China, and it will start selling here soon. German automakers, in the meantime, I think have been caught a bit off guard.
Yeah, I guess they need to go and re-strategize at this point. Thank you so much, Lars Holter, for giving us the details of what's playing out in Europe. Thank you.
Thank you, Ladi. Thank you.
All right, let's get a quick check on the crypto market now. It's getting into fear at this point. If you're looking at the fear greed index, that's on alternative.me, but Bitcoin there, big drops we're seeing so far with Ethereum, still holding on to the $4,000 level, 2.47% down. But let's look at how investors are feeling in the market. Are they afraid at this point? Yes, fear. Fear is setting at 44 points over 100. You're looking at the fear greed index, and we know how investors, some investors use the fear greed index of time their entry and exit out of the market as born. Well, let's bring in Seun Dania now, the CEO of Alpha Gig Tech. Hello, Seun. Great to have you.
Hi, good afternoon.
Good afternoon, Seun. So, yes, it's happening at this point. After touching $124,000 for a hot minute, Bitcoin is at 113,000. What's going on?
Definitely, we've seen over the time that whenever Bitcoin hits its all-time high, people will take profits. So that's essentially what happened at the point where Bitcoin hit 124, 25K, and evidently, because of the trajectory, a lot of people who were also trading futures would have gone long term for at least for as from as low as possible. So evidently, the people on the other end who will need to liquidate those longs or they kind of go up, continue the upward trend.
All right.
Yeah,
do you think $100,000 will hold, at this point with the rate of drop we're seeing?
Evidently. So if we look at the charts, we're seeing more of an uptrend. However, if there's a downtrend and it breaks 112K, 110K, we're probably going to be going towards the levels, maybe 107, but definitely not 100K, because we've seen a lot of institutional interest, the ETFs, and a lot of banks are already, traditional finance institutions are also coming into Bitcoin, as we've seen all over the place. So definitely 100K, 110K is a good entry point for most people. See that a lot of money sitting down on those parts. So definitely it's a bounce back.
Right. I'm talking about, banks coming in. U.S. Bank, there's Sophie Technologies, they've taken a bold step into the future, partnering with Lightspark to integrate Bitcoin Lightning Network and universal money address. So I guess the technology, banks are really exploring it at this point. How are you seeing that?
It's a positive step in the right direction. Let's remember that Bitcoin Lightning Networks, it helps people do the transact in Bitcoin as little fractions as possible. But one of the major challenges for Bitcoin globally, and since inception, has been the cost of transferring Bitcoin or trading with Bitcoin or running your everyday business on Bitcoin. And that's what the Lightning Network is supposed to solve. However, the Bitcoin maxis are not very, very pro Lightning Network because they feel it's against the fundamentals of Bitcoin. But let's see how it goes. But for general adoption, of course, Bitcoin maxis are not pro anything else besides Bitcoin. Only they don't even support USDT stable coins or any other things. So evidently, but for global adoption, Lightning Network and the banks integrating it will help people to not just always have to use stable coins, but they can always keep their funds in Bitcoin, carry out transactions, receive payments, issue invoices, receive invoices and all those things. And definitely, it's a step in the right direction.
I guess that's why we call them the Bitcoin maxis. At this point, they're not moved. But thank you so much, Shehu Dania, for bringing us up to speed on what's playing on the crypto market. Thank you.
Thank you very much for having me, Ladi. Have a great day.
You too now. All right, so that's the show today. That's how most of the markets we track are looking. Definitely we'll give you an update again tomorrow on what's playing out right here on Business Morning and on Business Corporate again at 1:30 tomorrow. Thanks for watching. I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.